Hey YouTube, what's going on? It's Patrick here at VectorVest, and today I've got an update on one of the videos that I keep getting questions about week in and week out, and that is the one chart that you need to be aware of to know when to be out of the market, when to be in the market. So this is going to be an update on that to answer everybody's questions because, once again, I still get a lot of questions about it, and so I wanted to do an update, make sure everybody's on the same page, and that you guys are aware of what's going on in the market and get an idea of whether we should be running to the exits or whether we should be getting ready for cautiously optimistic pop. So if you're ready to learn, you're ready to find out the truth, make sure to hit that like button, subscribe, and let's get into it. All right, welcome back YouTube. All right, so for everybody that's not familiar with this, or maybe you missed out on that first initial video about the one chart that you need to be aware of, well, if you did, click on the link in the description. You can watch the recap of it or watch the replay of it. I'm not going to get into too much of the review on that specifically. I'm just going to be doing more of a shorter video here today to update you guys because, as I said in the intro, there's a lot of people, even to this day, that keep asking about this chart pattern, the head and shoulders that we're going to be looking at, and what it's telling us now. So as you can see right now, I'm looking at IWM, which is an ETF based upon the Russell 2000, which is the more forward-looking index, if you will. A lot of people look to this to see which way the markets or the major indices, the Dow, the NASDAQ, and the S&P, should be moving in the future. So now we've got that up, as you can see, just to run through my layout real quick. I have the price shown in candlesticks. I have the DPO below there, which is a momentum indicator. I have stochastics here, which shows overbought and oversold. Also MACD and then volume at the bottom. So let's zoom in and update on the chart pattern, the head and shoulders that you guys need to be focused on. So as we can see, back around the beginning to middle of February, we were forming that left shoulder. In the middle of March, we were forming the head. And right around the beginning of April, we were forming that right shoulder initially. Well, since then, we've seen a sideways action, down, up, but no real clear direction based off of the Russell 2000. This is something that has really muddied the water, if you will, on that reading. Because we haven't broken out of the head and shoulders pattern, either above that shoulder line at 227 or below the neckline at 209. This now makes that pattern more voided out because we've extended ourselves too far from that head and shoulders. And that's okay though, because we don't have any clear direction. That's fine. What we're seeing now is more of a channeling in the market. A channel is more of a consolidation pattern, and it's showing essentially a lot of indecision in the market. Right now, people are worried that, inflation fears are kicking in, that inflation is going to run rampant. So nobody really knows what they want to do. They're not willing to bet the farm and have the market go higher because they don't think that it will, or they may have a little bit of fear about that. But then again, things aren't looking bad. Earnings are looking good. So therefore, we're still holding above those levels at the 209 or that neckline. So right now, leave me a comment below what you guys think. If you guys think this is going to break below the neckline or break above the shoulder line in the next few weeks. Eventually, something's got to give. Let me know your thoughts down below. All right, so getting back into it, we can see we hit that shoulder line right here around the beginning of March, or the beginning of April. Started pulling back. Things were looking like we were heading back down to the neckline. But then all of a sudden, some news happened. Some changes occurred. Ran back up, retested that shoulder at 227. Weren't able to hold those levels, which is definitely a key point that we want to note here is that, support resistance, especially inside of a channel, is a great crowd indicator, essentially. It gives us an idea of the crowd sentiment. So we saw it try to break out above that 227 level, failed, came tumbling back down, trying to retest that 209 neckline. But now we're back up above and back right at that shoulder level again at 227. So we're stalling out a little bit here today at the time of this recording. But if we see a breakout above that level, that would definitely be a positive sign. And as I always state in multiple videos before, Just because we have a breakout doesn't mean you go and buy. You always want to wait for follow through. Follow through is the most important factor when setting up a trade. So we want to see a close above this 227 level. And we also want to see the next day the price moving higher out of that point. That way we have a good prudent indication that the markets are comfortable finally lifting off and we're finally able to see some good buying opportunities. Now, we could stay in this channel for quite some time, as I said, but in a consolidation pattern, the longer we move sideways, the more built up pressure that we have in this consolidation. And eventually that build up pressure, once we have a breakout one way or the other, leads to an explosive move. The longer the build up, the bigger the move will typically be. So this is, exciting times getting to see this sideways move, because that build up pressure is just continuing to grow and grow and grow. And that once we have that confirmation, we have that breakout, we can make some serious cash in the market. Now, also another positive sign, we look at our indicators. DPO is picking up, showing short-term momentum building up to the upside, which is good. We look at stochastics. We just hit overbought territory the last couple of days, which just because it's overbought doesn't necessarily make it a bad thing. It just means that you need to be more cautious with it or follow it a little bit closer. But then we look at the MACD. The MACD has been tightening up here over the last month or two, which is more confirmation of that consolidation pattern that we're noticing of that channel. Well, we've had a few days up, few days down, starting to see more days starting to pick up over the last 4 days or so. MACD itself is starting to cross above zero. The MACD line is greater than the signal line, which is also a good sign and shows us momentum building up to the upside. If we see that pop, we see MACD confirming that, that would be a great early indicator to beat the market to the punch, be able to add some positions to your portfolio to take advantage of that explosive breakout pattern rather than getting caught off guard or waiting too late or waiting till the heads on, talking heads on TV are talking about it. And then by that point, you've missed that explosiveness from that initial breakout. So keep your eyes on this chart. Keep your eyes on this channel, because once it breaks out, you can be rest assured that there's going to be a lot of money to be made very quickly. Also, just to do a quick recap, want to take a look at the other major indices as well. So if we go here just to quickly look at the Dow has been on a great run. We've seen a little bit of consolidation here over the last month or two, but overall, a nice steady rise from bottom left to upper right. One thing that is a little bit of a worry here at this time is DPO steadily dropping, kind of showing that some momentum may be waning here. But stochastics tells us it still has some more upward momentum or upward trend to go before we get to those overbought territories. And then looking at the MACD is starting to consolidate a little bit, telling us that either something is building or that we're slowly going to see a drift lower. Now, if we go take a look at the S&P 500 or the SPY, we can see a little bit more volatility picking up here over the last few weeks, which is usually a sign of a major change coming. So keep your eyes on that volatility as well with the S&P 500, but similar situations. The DPO is dropping significantly. The MACD also dropping a little bit here. Not really cause for concern quite yet. If we see the MACD drop below zero, that would definitely be an early warning sign, but overall, just looks more like some capitulation or consolidation more so than anything else, which, sometimes you need. You have to have the markets take a breather so that way they can have the strength to really continue that upward climb. And then last but not least, the most volatile of the major indices, the QQQ, which is looking at the NASDAQ 100. And as you can see, bigger volatility all throughout the year. It's had a great run so far, but there's a lot more volatility than what we've seen with the Dow or the NASDAQ. Still has that upward trend. You still have higher lows, higher highs. Would like to see that previous high being taken out so that way we can get confirmation of the higher highs. But similar situation, we saw DPO actually drop into negative territory with this one, starting to come back, showing an uptrend, maybe starting to form again on a short-term basis. Stochastics is in overbought territory already. And then looking at the MACD took a pretty significant hit off of that most recent pullback at the beginning of May. But setting ourselves up, moving sideways right now. If we see those start to break out, move above zero level again, that could be a great long-term indication, just like we saw back here, just like we saw back here, and other times previously. So once again, thank you for tuning in. Keep your eyes on this sideways channel with IWM, because once the Russell is a forward-looking index and can give you a lot of insight into the overall investor sentiment on the market looking forward, which is what everybody's trying to do right now. Everybody's trying to get a crystal ball and see what's going to happen in the next 6 months, the next year. Nobody knows, but looking at these charts can definitely help you out with that. So if you've enjoyed today's video, don't forget, as always, like, subscribe, turn on those notifications for every time we come out with new content, which is on a daily basis, and leave a comment down below what your thoughts are. If there's another chart that I'm not looking at that you guys are looking at, let me know in the comments. Let's get the conversation going. So until next time, take care, adios, toodles.